Ramsey Solutions crunched the numbers and determined that a 50-year fixed-rate mortgage would lower monthly payments, but overall, a person would be paying a larger grand total because of the higher interest rate. So
the President of the United States came out over the weekend and proposed a 50-year mortgage term. Now, the first thing you're going to think is, that's fantastic. It's going to save me a lot of money. I can get into the market. But the nice thing about this is you're going to get my take on it, because I was actually on News Nation earlier this morning, so I'll show you my take on that. But I really want to get to today's news and what's going on. So here's what's happening behind the scenes. The federal government, they were supposed to come out of shutdown mode, but they haven't yet. All the members haven't really voted. They're rushing back to do this. So once the markets open back up, what data are we going to get? Is it going to be good news? Is it going to be bad news? Well, that's the data that we're going to focus in on later in this video, because if you're watching this, you're a homeowner, you're a home buyer trying to figure out what the heck's going on with those and the whys behind it. But first off, the President of the United States came out this weekend and said maybe a 50-year mortgage would help people. So instead of showing you CNBC's commentary, I'm going to take you over to News Nation to see what I have to say about this. So let's start it from the beginning, because I think you're going to want to watch all of this. And at the end of this, I'm going to show you what how the market's reacting to this, the non-government shutdown, and what my expectations are latter part of this week once we do start getting a lot of this information that the Federal Reserve's monitoring. So without further ado, folks, let's get over to News Nation and see what I have to say about a 50-year mortgage.
Ramsey Solutions crunched the numbers and determined that a 50-year fixed-rate mortgage would lower monthly payments, but overall, a person would be paying a larger grand total because of the higher interest rate. So for example, if you took out a 50-year mortgage for $200,000 at a 6% interest rate, your monthly principal and interest payments would be just over $1,000. However, the interest that you would pay during the lifespan of the loan would exceed $430,000. If you took out a 15-year mortgage for $200,000 at a 4.5% rate, your monthly principal and interest payments would be around $1,500. Even though it is a little more cash up front, the interest that you would pay over the life of that loan would be around $100,000. That is $330,000 less than a 50-year mortgage. So a lot to take into account here. I'd like to bring in mortgage advisor and host of the Rate Update, Mr. Dan Frio. Dan, great to see you. All right, this really has a lot of people talking in the newsroom today. What was your initial reaction to the prospect of a 50-year mortgage?
First off, thanks, Nicole, for reaching out to me to actually address this. The first thing you would think of if you're a home buyer, because this is going to affect the home buyers mostly, you're thinking, okay, this is fantastic news. It's going to plummet my payments. But when you really dive into it, is it really helping you or going to hurt you? Here's my thoughts on it. Like you just said, the overall payments are going to be at least double what you're going to pay. So what a lot of people are looking at is when you get into that house, I want some major relief. And if you do break down the numbers, the difference in a 30-year mortgage versus a 50-year mortgage, in your equation there, you're using a rate at 6%. But what is going to be the 50-year mortgage rate? Right. Because a 15-year mortgage rate is lower than a 20, which is lower than a 30. So what's the 15 or 50-year going to be? So that's one piece of the puzzle. But overall, I think this is more of a payment relief tool, possibly for first-time home buyers, mainly because a savings of $150, $200 isn't really fixing the problem. So that's what, is this a ploy to get more and more people into the housing? I think it's more of you're going to pay a lot of money over time. So, the caption you had earlier, is this a relief for home buyers, or is it basically a wealth building crasher for people out there? That's going to be dependent on where you live.
Absolutely. And as you said, it really does depend on that mortgage rate, because, right, you would think if it's 50 years that interest rate would actually be lower. But again, you're paying that every month for 50 years. Yeah, that's a long time.
And you would think, okay, going from a 30-year to a 50, what's the first thing you would think of is what? That payment's going to really plummet. It doesn't go down. It goes down 8%. 8.44% is actually how much it drops. So there's not that big of relief. I mean, unless you're buying $1 million home. So if you're buying an average house today, $300,000 or so, it's going to save you maybe $150. Now, $150, but then when you add the taxes on it, then the insurance that's going up 27% a year and so forth, it's a struggle right now. to buy a house. And that's why I love the caption that you guys had. Is this going to help or really hurt the markets? And then you think if your payments go down, this is going to push more people from renting to buying. So then ultimately what's going to happen with the home prices?
Right.
They're probably going to go up as well. So you have home prices going up, taxes going up, insurance going up. So in the long run, I think it might just be a ploy to get more and more people in there because the savings really doesn't add up when it comes to the payment.
And you mentioned the fact, there is this 15-year mortgage. There was the 30-year mortgage. Has anything like this ever been tried before, a 50-year mortgage?
So here's the problem is I've been doing these numbers for years. And the Dodd-Frank bill that came in during the housing crash of 2008, there was legislation that passed that allowed a 40-year mortgage. So then when that was passed, we're thinking, okay, can things really change to a 40-year mortgage? And then when you start doing the numbers, it's like, okay, it doesn't save you as much as you think. So one part of the legislation is the max term right now is 40 years. To get a 50-year, cycle out there, you're going to have to change the legislation, which is going to act. I think I did the numbers. I think there's a 30 or 40% chance of that really passing. So I don't think this is really going to pass. But if it does, again, I would still, if you're looking to buy a house, I would look to make it affordable in a 30-year term. And if you can't make it work, then, just try your best to save, do what you can, and just get into that. Because, could this help? It's like that old adage. It's better to be, don't time the market. It's time in the market. So could this get some people into housing? Yeah, it could. But it's going to take you over 20 years to pay down and get $50,000 in equity in your house. That's a long time to build equity. But it does get you into the market. So it depends on where you are, what your situation is, and what rent looks like in your area as well. So like I always say, it's what your area is doing, what your market's doing, because every market's a little bit different.
And last question for you, Dan. I mean, if this becomes a reality, this 50-year mortgage, who do you think would be the ideal customer here? Because would people over the age of, say 40 or even 30 potentially kind of be excluded, considering the average American lives to about the age of 78, which would be just shy of making those final payments if a 30-year-old took this type of loan? I mean, is this ideal for somebody in their 20s?
Yeah, I think, like I was saying earlier, I think it's a first-time home buyer get in because many are struggling. You get out of college, you have that college debt. Then you probably need a vehicle. Then you need this, and then so it could help first-time home buyers.
Dan, I mean, let's be honest. There's a lot of first-time home buyers right now in their 30s and 40s who are trying to get in now. I see them every day. Yeah.
We got 5 contracts in today, and probably the average age is, like you were saying, 35 to 40 years old. It used to be, 26, 27-year-olds, and you're out there trying to educate them on the financing of this. But in today's market, it's completely different. And I have to admit, what I'm seeing in our markets and on the applications, there is a huge disparity with the haves and the have-nots. There truly is. So I come out each day, try to help those out there that are, down there to help educate them. Economics 101, how do you budget? Just things like that to help educate them. Because once you buy that first house, it doesn't stop there. If you're a homeowner, you're going to buy furniture. You're going to buy this. A lot of people don't understand. You have a cable bill now. You have an electric bill. You have all these bills that you didn't have at home.
Just all of the things that you can't call the landlord. You have to pay for it yourself. Yeah, it can be very daunting.
I love home ownership. It was a dream of mine. I think it's still the American dream, hopefully. And so, that's why I do what I do on a daily basis, is just to help inform people of things just like this, and not to really force it down their throats, just to say, here's the reality of it and here's the numbers.
Well, we will see if this 50-year mortgage becomes a reality or not. Dan Frio, thank you so much for your time.
So don't end there. That was me being live today. So let's get over to how the markets are reacting today, because we didn't get that government coming out of shutdown. So let's get over to see what the Dow Jones is doing. Dow Jones jumps 400 points. Let's go to the Dow Jones. Let's see if it's one of those Cinderella days that we always speak of. So what the Cinderella day is when we see, yes, so far we're pretty good, is when we have all the indices across the board right through here up. And if you have money in the stock market, you're probably in a long position, meaning when this goes up, you're making money. When we got the VIX going down, that's at 17. This is basically think of the blood pressure on Wall Street. The lower this number, the calmer the markets. Anything in the teens, it's not a bad number. You go to cryptocurrency, so far it's that Cinderella story. Oil is below $65 a barrel, so I'm actually giving this all a thumbs up because at $60.13 a barrel, that is helping our inflation quite a bit. So let's see how this news reflects over into the bond market, and they're not liking something. So here's what we follow on my channel. When you're trying to figure out what the heck's going on with mortgage rates, we watch this right here. This is a mortgage bond. So the only thing you have to understand about this bond is if the number is going up, that means rates are coming down. If the number is going down like it is today, that means rates are going up. So if you're a homeowner, what can you do right now to protect yourself? Well, I created a system right through here. And if you go to our website, it's called the Rate Update. You can check out our RateWatch 2.0. What this does is it allows you to let me know what interest rate you want to refinance. Here's what's going to happen. When the rate hits it, I'll call you, text you, email you. We'll go over what the payment is, what the cost is, and if it makes sense, we'll get you locked in and paperwork started. If not, we'll continue to monitor rates for you. So that's what that system will do for you. But here's my reluctancy right now. As the government comes out of shutdown, we're going to start getting more and more data. What's that economic data coming in this week? Well, it's right through here. We got inflation numbers coming in and jobs numbers coming in. Why is this so important? Well, it's basically what the Federal Reserve monitors. They monitor these things right through here. So the Federal Reserve was created for two mandates. One was full employment. Anything under 5 is full employment. And also is to keep prices in check, aka inflation. So this week, hopefully by time the government comes out of shutdown mode, we can get this data. So what's coming in is consumer inflation. Here, let me split this up. So consumer inflation numbers are going to come in on Thursday. We're going to get core inflation numbers. That strips out food and energy. Then we're just going to get the consumer inflation month over month and year over year. We're going to see how that comes in. Then we're also going to get initial jobless claims and continued claims. How is the jobs market looking? If it's looking bad, it's good news for the Fed. If it's looking good, that means the Federal Reserve might not cut. So what's actually going to go on, how these numbers are going to come in, I don't know. So if you want to pay attention to this, subscribe over there. If you're a realtor, you're a loan officer, or you're a buyer of a house, you're a homeowner looking to track these things, make sure you click over there so you subscribe. So every day when I post a video, you get an alert. But what's my thoughts on all this? Well, the first thing I need you guys to understand is what are the mortgage rates looking like today? So if you ever look at mortgage rates, it gets really confusing. Okay, so let's rewind back to where we started at the beginning. So I always start here and say, here's what rates are doing and so forth. This is Mortgage News Daily. I've been using this for years and I've got their consent, so I just keep using it because it's pretty simple to use. But if you're really tracking rates, here's what you can get. You plug in and you say, okay, what's today's 30-year fixed rate? So here's what you're going to get. Mortgage News Daily has it at 6.34. Bank Rate has it at 6.26. Freddie Mac has it at 6.22. Well, why wouldn't you just call Freddie Mac? Well, you don't know what the differences are. So like, for example, Mortgage News Daily, this person, to get that rate, you need a 780 credit score and you got to be putting down 25%. So is that you? That might be your rate, but that might be your rate. What's your rate? Let's get over to my website so I can help kind of explain how all this works for you. So my name is Dan Frio. I come out each day. I've been doing this for 35 years, folks. I'd love to be able to help you maneuver buying or refinancing. I'm actually a federally licensed mortgage loan officer. That means I'm licensed in all 50 states as well as Puerto Rico. I have a slogan though, and it's one application, one credit pool. We're going to compare your loan to over 30 different lenders. How do we do that? Well, folks, we're set up at the bank with over 30 other lenders that we can use their programs and their rates. So if you want to navigate this on your own and call all these places and do that, go ahead. But if you want to put in your application one time, have your credit run one time, and get quotes from over 30 different lenders, that's what we do here. So my name is Dan Frio. I come in each day to advise you guys and hopefully educate you guys on what the heck's going on with those and the whys behind it. So that's our report for today, folks. I'm expecting the federal government to come out of shutdown mode in the next 24 hours. And then as the financial news comes in, I'll be here every day to report to you guys what the heck's going on with those and the whys behind it.